The following is a presentation of TFNN. The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we are going to have some action today. As you can see from the DAX index, we are up near the old highs in the daily index. We've made new highs in the S&P. We've made new highs. I've already posted one chart. I hope it lasted. I just posted two charts in the den. Did they not go through? Shut the front door and raise the rent. Let's just take a look and see what we got here. I already did this once, but let's do it again. See if we can get this moving. There's one. I hope that went all through. That should be good. Yeah, there we go. Have to click the link. Oh, that's it. All right. Okay, it's working okay now. All right, we're in good shape with the DAX. Anyway, you can see it's going up. We've got the Federal Reserve is going to be acting today on interest rates. It's hard to believe, folks, when I first started doing this stuff with Treasury bonds. Well, I don't know what's happening because I am sending it through. Let's just try it again. And I haven't done anything different. That much I'm absolutely sure. So there's the chart. And I go in and I click on the little camera. And I hear the click. And I see it's gone into the den. I don't know what's happened. Well, it's there because I just saw it pop up. So something's not right. It's coming in, but it's not registering. We'll not worry too much about it. Let's just get on to business and see what's happening. Maybe they can figure this out for me here at TFNN to see what's going on. The big thing, folks, is, we talked about that possible 61% retracement in silver yesterday. It did pretty much exactly what we had hoped that it would do. It stopped, right at, the 61% retracement of the move, and has had a pretty good move from that spot. It's already moved well over $2,000. Just in the last part. Now, when we were looking at that gold yesterday, remember the importance of that 1265 level. We went down to 1261, and then we closed above 1265, which was a positive sign. And then this morning we had a very slight pullback to 382 retracement, and then it was off to the races. So it's going to be interesting to see what's going on, with this. If it's real, and it certainly does, because we've already rallied $20 an ounce in gold, and that's a pretty substantial move, as it is in silver. So both of those are important. We'll look at this gold chart one more time just to keep in mind how important this number was down there. And it could be, because we're already back up above 1280 an ounce. And boy, if we get above 1300, folks, this thing's going to have big legs. Whether it's the key was that silver move stopping exactly at 1672 yesterday or not, I'm not actually sure. But all I know is that's a really important number now that we're looking at here to pay attention to in the silver and then also in the gold. We've had a request to take a look at something that I believe it's an ETF called SPG. We'll put this up. I'm not sure what SPG is, but I'll bring it up here to let you folks take a look at it. The question was, where would I go short this? And the best place is, if you'll look at what's happened in the past when you're doing technical analysis using pattern recognition, you'll see the equal moves that are in this SPG. And now this is a $150 number, so this is not a small ETF. This is something really big, and these swings are pretty big. But you'll notice that these moves that it has, those equal moves, are all around $10 to $12. We had one between January and February. We had one between March and April, and I believe we're, getting ready to get another one up here around the 165 level. So that would be the level that I would look at. And then if you were to just draw just a normal trend line down from the first equal move back in February, you'll see that fits very nicely with the pattern. So you have a downtrend, you're selling an equal move at a Fibonacci retracement. Those are some of the things that we like to see when you're doing these things to make them work. Folks, I wanted to mention that I'm going to be doing a 2-hour webinar next week, in 2 weeks, for TFNN. It's going to be my autobiography. I did this in Europe, and it was really well received, and so it was so well received that they've invited me back this fall to do it in 4 cities. So it's basically the story of my life, the good, the bad, the ugly, my education through this, all the things I learned, all the things I didn't learn, the people that I met along the way. And it's going to be real interesting. There'll be some question and answers for you, but it's going to be a very interesting 2-hour webinar if you want to listen to the story. I'm not going to be able to write an autobiography. I just don't have the energy to do that, but I am going to be able to do one that is that's going to be audio. I believe it's going to be around the 28th of June, I believe. Let me double check. Yeah, I think it's, let me see. Today's Tuesday. Let's see. Let me double check here. I believe it's around the 28th of June, but I'm not 100% sure. That's just my 2 cents worth, but it'll be fun. It was really well received. I was surprised why anybody wanted to listen to me for 2 hours, but boy, it went actually quite a bit over. But they were interested. What they were interested more in it is how I came back from losing. That was the main thing. Why didn't I give up and stuff like that? The success part, I don't think they really cared much about, but they certainly wanted to understand, why I lost and how I came back and why I never gave up and stuff like that. But, this has been a great business for me, but nothing has compared with the people that I've met along the way. That is an asset that you can't take to the bank, but believe me, that's the best asset of all. And it's been a lot of fun. So that will be good. Folks, back in 1976, when we first started trading Treasury bonds, we were looking at interest rates that were on their way to 13% in T-bills. California muni bonds, AAA bonds, were selling at 16%. In other words, you had tax-free muni bonds at 16%. That means you're making 32% on your money. I bought some of those. The problem was they were called away in 1982 when rates started to go back down, and they've been going down for 35 years. Well, actually the top was 2 years ago, so they've been going down for 32 years, and today they're going to be moving. Now, back in those days in 1976, the big thing to trade was the U.S. Treasury bill. That was the 1-year bill. Those were yielding at around 11 to 12%. And believe me, they would swing $2,000, $3,000 in a day. It was very, very volatile. It was one of the reasons why I went to the Chicago Mercantile Exchange to trade on the floor, because I wanted to see that these things would be easily tradable and that your fills were accurate and they weren't sharing your orders. They were not flashing stops, and they didn't do any of those things. It was very, very fair. I was there for 2 years. I saw very little shenanigans. A few, but, it was very few, just like almost in any business. But that was the main reason, because I had seen that the desktop computers were coming and that we were going to have our own charts. So I knew that day trading was going to be really easy, and also trading from home was going to be easy. We'll take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I posted a chart of the 30-year Treasury bond. As you can see, we're breaking out of the highs from the last several weeks. This is a chart we've been watching for quite some time. And whether this is going to be a valid breakout or not remains to be seen. So far, we've only taken those highs out by just a few ticks, but that's just because buy stops and things that were in there. But it really needs to get above the 155.20 level. So far, the high's been 155.17. If we can get above 155.20, then we'll be looking at something that could have some pretty serious legs attached to it. But the Fed will have probably something to say today. Everybody is saying it's a 50-50 toss-up. Folks, it really doesn't make any difference because the Fed follows what the markets are doing, and it looks like they're not going to do anything because rates are going lower on the short-term basis, as you can see. But on the long-term basis, we topped several years ago. We are going to go higher in interest rates. The question is, how much is this bear market rally going to extend to? And as you can see from the chart that we've just posted in here, we could easily make that 160 level, which is only 5 handles away. And we've already moved 5 handles, just since the middle of May. So it wouldn't be hard to do that over the next few weeks. But that would be an area where you'd certainly want to be looking to be a seller of bonds up in this area. How much it means to the stock market, I don't know. All I know is that I look at the patterns, and that tries to give me an idea of what I'm trying to see, as I look at these charts, every day. I'm just basically looking at patterns. That's a thing that, led me to the promised land, and I believe it's a promised land. But anyway, that's what we're watching here today. Let's take a look at since we're talking about patterns, and I do like the ABCD pattern. We'll just pull one up here to take a look at it. This is the one that we were looking at in the middle of the night. Well, actually, after the market closed yesterday. And if I can just get the update on that, hold on, if I can find it. Here's the one I want to look at. This is the one. This is the IWM. We were talking about this in the den yesterday with Mr. Z, and I wanted to bring this up and take a look at it so you can see it here. you'll be able to see that we get this thing about another 2 points higher. You're going to be making a 3 peaks in a domed house pattern. We made the 3 drive pattern. We backed off with an ABCD structure right into the 78% level, and then we've rallied up, and all we need now is just a little bit more here in the IWM up around this 143 and change level, and that's about 2 points higher than where we closed last night. That would get us right to that level, and that would be a very good spot, to be short, and you don't have to risk very much at that point. Usually around 1% is all you would have to risk, because when these patterns work, they work with relatively good precision, but when they don't work, that's when you really have to focus on, what's really important with this. So those are the things that I think important. Now, if we translate this to the Dow Jones E-mini, we'll just take a quick look here. I'll just show you the double. This is just disregard the notes on this. It doesn't make any difference. But let's just take a quick look here at the Dow Jones E-mini, looking at it on a 30-minute chart over the last 10 days. And you can see that we do have 2 ABCD structures that measure to 21,305. So far, our high last night was 21,332, I believe. So I don't know if it's gone above that level or not, but there are 3 ABCD patterns coming together at that level. Now, whether that means anything, I don't know, but we have Fed day today, so it's going to be interesting. And, of course, the markets get a little super emotional during that time. And from that level, we'll have to wait and see, what's going to happen from that point. That's the real key in that market. The other market that is really trying to hold but has not been able to, gather any strength as of yet is the crude oil and heating oil markets. They have still, fallen far behind the rest of the markets, but they are trying. At least they're holding major support. That's about the only thing you can say. We're up a little bit today now in crude at, the 46.23 level, but still, really not too much is going on at that level. Now, we've had a request to take a look at a stock that's in the news quite a bit. This is NVIDIA. And I'll bring the chart up for you. The only way I could see anything in this NVIDIA chart was to go to a weekly chart. And as you can see, way back in 2016, on a weekly basis, it made a perfect 61% retracement there in February of 2016 at 29. And from that level, from 29 up to 171, that is one heck of a move. And as you can see, we have a shooting star candle at the very high up here. Now, whether that's going to be indicative of a major top, we don't know, but there are some ABCD patterns, at least one of them, that's up here in that level. But this is a chart. If you're doing anything with this chart, I would suggest you go down to a daily or even an hourly to try to find your patterns, because that way you can at least, protect yourself, because a $151 stock can move $20 or $30 in a day, and that's that's not fun to be short if you're in one of those. That's why you have to protect yourself at all times and find trades that offer you the smallest amount of risk. And then, of course, we don't know what the profit potential will be, but you assume that the profit potential is going to be 3 to 1 or better. But remember, focus on the risk. Always focus on how much money you're going to lose, not how much money you're going to make. That'll be a big difference if you learn to do that. That was that stuff that you see in all of the books. I mean, it's just everywhere in there. We're going to come up a couple of minutes here. In about 6 minutes, we're going to have, hopefully, Bill Meridian of Cycles Research will be our guest, and he'll have some great information, as he always does, and he certainly knows the crude oil market pretty well, and he's certainly been pretty much spot on in the gold, and certainly in stocks. So we'll have Bill on in just a little bit. And then tomorrow, we're going to have Norm Winsky of Astro Trends, and then on Saturday, we don't have anything. But on Friday, we will have Stan Harley of the Harley Stock Market Cycles, and he's right over a major trend change. Usually he thought it was going to be a low, but it looks like it could be a high. But he'll be on Friday to talk to us, about that particular one that we're watching real closely here. So those are the main things this morning, and we've got to do one other thing. And I know what it was. Let's just take a look here. That's not the one I wanted to see. Someone had another question about something, and I don't have it. Here it is. This is the silver chart. We wanted to see what we were looking at yesterday. This is where we hit the exact 61% retracement. Mr. Z in the room here at the Tiger Den was calling for that number at 1672. That was the exact low. I believe the exact low was 1671, and right now we're trading substantially above the $17 an ounce level with a pretty big move in silver this morning. So this is also a move that could really be really, really big because, gold held that level. I mean, it went below it by about $4, but it came right back above it, and that's what was really important. Yesterday we had William from Singapore on, and he wanted to buy it, and I told him wait till it gets back above 1265, and so far it's working. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Meridian of Cycles Research on the line, I believe. Bill, are you there?
Yes, hello, Larry.
Hey, hello. Listen, thanks again for being on last 6 weeks ago when you were talking about this big move coming up in stocks, and it's continued to do that. But I'm going to turn it over to you, and
Sure.
just go ahead and tell me when you're ready to move to page 2 or 3, and I'll be happy to do that. So it's in your hands, my friend. Go right ahead.
Okay, Larry, did you get my second set of charts
Yes,
that I just
I've
sent?
got them ready to go. I got the second
Okay.
set up and
All
ready.
right. So page 2. I'll tell you what I think is happening right now, the short term, and then we'll move to the more intermediate term. But first of all, it's OPEX week. And OPEX week in June is not one of the better ones. Of the 12, there's one every month, obviously. And it's a phenomenon that obviously only began in 1985 when options trading started. But it's very real. It's like Art Merrill's end of the month where there's a bias to the upside. And June normally is not a good one. But number 2, there's an FOMC meeting this week. And I'll mention it again. I've mentioned it before. I'm at a luncheon about 5 years ago, and David Stockman addressed the group in New York. And he said, do you know how powerful what the Fed is doing affects the investment community? If you went back to 1993, and you extracted out the 4 days around the Fed meetings, in other words, the day before, the 2 days of the Fed meeting, and the day after, if you take those 4 days out, and they meet 8 times a year, so that would be 8 times 4, or 32 days every year, from 1993 to the present, which then must have been about 2012 or 13 or 14, he said you reduce the annualized S&P gains from 6.5% annually to 2.5%. I nearly fainted when I heard that. And
Wow.
I sent this information over to Tony Plummer in London, and Tony he created a graph and he demonstrated it, and he said you're right. It's like the old days when they had tremendous inflations that you read about in the financial history books in London, Amsterdam, or Paris. They would send runners from the Bank of Amsterdam or London or Paris to the markets to tell them how much money they were going to print. That's how addicted the markets are to what the Fed is doing. So the combination of the two caused me to take a long position on Friday, despite the big sell-off in tech on Friday. Now, post-OPEX week, as we're going to see, the downside bias, there's a heavy downside bias in June. It's one of the most bearish because June itself is usually down. And June 23rd is likely the next low. Let's go to the next slide. That is
Okay.
OPEX week performance in months of June only. And you can see, this is expected return. So the expected return is for a strong opening, a soft Wednesday, and a pretty good close. It's not the strongest, but because the FOMC meeting was this week, I went with it. And now let's go to the next one, number 4. Now look at post-OPEX week. See the
Okay.
top bars are the expected return, which is, as you can see, is negative. In other words, it's the amount that's been up or down in the past. Uh, the amount it's been up and down. So if it's been down, 0.5%, 60% of the time, then this would come in as 0.3. And down below that, that line is what would have happened to $100 that you invested. And as you can see, so
Wow.
I'm taking my short-term S&P profits, which are in the SSO, and I'm switching to the SDS on Friday for these reasons. Now, if you go to the next slide,
So and you're actually going from long to short.
well, very short term, I do a lot of trading in the SSO SDS.
Mm-hmm.
And the 3 keys are, number 1, the end of the month strategy, which I can explain another time because I optimized it. And number 2 are the FOMC meeting days, and number 3 are the OPEX days. And I've done a lot of work on extracting the maximum profits out of that.
Mm-hmm.
And that's what I do with the spare cash that's not fully invested. So if we go to number 5, the breadth, however, is at a new high. And as we know, breadth usually tops 3 or 4 months before the market tops. So add 3 or 4 months on to June, and at the moment, there's no big high really visible in terms of the breadth numbers.
Mm-hmm.
And now go to the next page, and this is something most people have missed. I used to be a value liner, and they have indices like this one that are equally weighted for 1,700 stocks. So this is what most stocks are doing. If you make a tiny stock the equivalent to GE, this is what you get. Look at that. There was a 26% drop in 2015. And again, as my friend Walter Murphy, he just put out a piece in which he said, well, my Elliott wave shows that we began a new uptrend in 2016. Well, this bears out what he was saying. In other words, most stocks took a 26% whack in 1 year, but it was the big cap stocks like GE and the other stocks that held the indices up because they have the heaviest weighting. But most stocks got clobbered, so now most stocks are coming back. So it doesn't look that bearish. And to go now, if we, let's see, what else can I say about this? I think that's something most people missed. So I keep a line, I don't have it here, but I divide the value line by the OEX 100, the OEX 100 being the 100 largest cap stocks in the S&P, and then value line being 1,700 stocks equally weighted. And that line has been rising, which tells us most stocks are rising after getting destroyed in 2015, while it was a bit of peekaboo with the market. The big index, the big cap stocks held the indices up. So now if we go, yeah.
Bill, I was even surprised that Value Line is still in business. Back in '83, when I was on the floor of the exchange, the Value Line sold at a premium to the NASDAQ because it just started trading, and it just it's still around, I guess, huh? The Value Line?
Value Line, the people who
it's
run
out
that...
of Kansas City, isn't it?
They are in New York.
Oh, they're in New York. Okay. That's
No,
been
but
a long time.
I worked there for 3 years, and I'm not at all surprised because the people who run it, they couldn't sell water in the middle of the desert. and I'm surprised that they're still around. And I met with 2X Value Liners, and we all agreed they were in a primo position to be number one in the field, fund management and the model that they have. And there's so much squabbling and infighting going on there that nobody's got any time to manage the company.
Yeah.
So that's the way it was. So if we can move to slide 7.
Okay.
This is, I start my projections for the year with the 1-4 and the 10-year cycle. And this is the addition of the 1-year cycle, as I'll just review it briefly, is the annual cycle of the year, that the market is strong in the spring, tends to hit a high in August or September and declines into October. The 4-year cycle is that of the election. And the year after the election, which this is usually the most bearish. It's not the case this year. And years ending in, and then there's the 10-year cycle that was developed by Edgar Lawrence Smith in the 30s. So if you add them all together, you get, obviously what stands out is a significant high in the middle of August, and then a sharp decline down into late October. And actually October is usually up, but it's had the biggest down days and the greatest volatility, but it usually closes on the upside. Now, to this, I'll look at special considerations like page 8. The green line is the Dow Jones performance 1885 to the present, but only in years ending in 7. And here you'll note that the average high backs up. We have to sell something.
Okay, we got a commercial. That's right. We have bills to pay. Stay with us, Bill. Bill Meridian, Cycles Research, Vienna, Austria.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Bill Meridian of Cycles Research. Bill, looks like we're on page 9. Is that correct?
Page 8.
Page 8. Okay, let's get back there. All right, this is the year 7. All righty. Let me get it up there again. Okay, go right ahead.
In years ending in 7, the high tends to be earlier. On average, it tends to be in the middle of July, and the drop is steeper. So that's the basic forecast for the year. And so that is what I'm looking out at. And I think the way I look at it is there's going to be a correction somewhere. The maximum danger period is July 15th till sometime into early September. We're going to have a correction, but the way we've been having corrections, as you know, is they occur, and 90% of the damage to the market occurs in about 10% of the time period. It occurs very quickly. And of course, for buy and hold fund managers, I would just say I wouldn't be doing any new buying right now. I would keep my cash. If I had 3% cash or 5%, I would just hold on to that until we get to a low in October. For traders, I continue to do what I'm doing. Like I'm going to go short Friday, and as some football coach once said, every football play is designed to score a touchdown. Well, every trade is designed to be profitable. They're not, if the market drops 1 S&P point next week, or if it drops 100, I've still got a profit. Mm-hmm. So that's the way I look at it. But somewhere along the line, we're going to get whacked here. Now, can we go to the next slide?
You bet.
This is the XLK, the technology ETF, and you'll notice it's got the highest momentum, or it's the most overbought in 13 years.
Okay.
And if you go to the next one, Apple is the most overbought in its history. Now that's
okay.
Not an outright.
Give me a second.
Yeah.
I got to get to the Apple one. Hold on one second. I'm doing this quickly, and I don't want to miss anything. There's Apple. I'm ready to go.
It's its most overbought in history, which is not necessarily a sell signal, but it says it's very vulnerable. And when is technology the weakest? I know this from running a technology portfolio for a decade. Somewhere from the middle of August to the middle of October. For the overall market, it's early September to late October. But technology, it's usually, there's a correction mid-August down to mid-October. Now, without going into lots of details, the correction that occurred last week, most of the tests I've run say that it takes technology about 30 days to get back into an uptrend after such a whack. Well, if you add 30 days onto last week, you're coming to the middle of July already. Mm-hmm. And if the average high for technology is in mid-August, that's only 60 days from now. So I would not be buying any technology stocks unless you have inside information or you own Tesla. Because Tesla is recommended in my newsletter, and Even after the sell-off on Friday, the chart still didn't look bad. And I think there's real great fundamental value there because I know engineers from Silicon Valley who told me that they, initial tests of the car many years ago. And so that is how, that is why I would not look at technology. So it takes about 30 days to recover from a crack from an overbought level, as we saw on Friday. And that will take us to the middle of July, which is when the years ending in 7 cycle tops. And even if it survives that, the average seasonality for technology is look for a high in the middle of August, which is only 60 days from now. The one thing I
Bill,
did do, yes?
we have a question from one of our listeners. You were on a couple months ago and talked about the importance of this August eclipse that's coming up. Could you reiterate that again, please? We're going to have you on again before August for sure, but could you give us a little bit brief about that August eclipse?
Yes, but it's at the end of this presentation.
Okay, good. Let's fire away. Yeah.
So
let's
let's go to slide 11.
Okay.
Now, Larry, you know what a hook sell signal is. We've got it right on the screen.
Yep.
That's Facebook. The market goes to a new high or a new low if you're looking at, but it goes to a new high but closes below the close and the low of the previous day. That's what Facebook did. Now, Dr. James Neefsey at MIT, obviously a scientist, he asked the question, why do some hooks work and some not work? And he ran a test called multiple discriminant analysis, and he measured those that worked versus those that didn't work, and he added some qualifiers. The number one qualifier you see in the second strip of this graph, that is momentum has to confirm, and you'll note that momentum did not get to a new high. You have a clear divergence. And the third one, there are about 5, is the volume. You see at the bottom strip, the volume has to be greater than that of the average of the 3 days, which it definitely was. Cambridge hook sell signals, which is what it came to be called, are about 80% accurate. And if you just Google it and Neefsey, which is Kneafsey, you'll get all of the conditions. But a lot of the technology stocks have done this. So a lot of them, like this one, are on Cambridge hook sell signals. So let's do a brief look at bonds in June. This is a very exciting month. Just take a look at that table and let that sink in for a minute. From June 10th to 16th, bonds have been up 77% of the time, but June 16th to 22nd, down 83%. Now that's an average, and if you look at the bottom, you see these figures which are dynamic. I've computed that the 2nd, the 8th, 9th, and the 14th, which is today. Now compare 14 with the asterisk to the table, and so you're sitting on the brink of maybe an 83% chance of a down move, so I would go short bonds on the close today. I don't think it's going to fall very much, but that's the way bonds look.
Okay. So
let's take a look at gold.
Okay.
I have a gold using the turning point method. I had a high, which actually the high was about 2 days. The actual high was 2 days off of the projection. But there I have in my letter, I did not think it would break through that prior high. It didn't. It sold off. It got a profit. I would take that profit by the 15th, which is tomorrow. So that's where gold is.
Okay. Then you've been spot on the gold too, so congratulations. Now the next one is the eclipse.
That is the eclipse, and just to review it a little bit, I've left out a lot of stuff here, but if it occurs at 29 degrees of fixed signs, and this is 29 Leo, those eclipses, don't ask me why, have been associated with the world wars. And the last time we had it, well, last, when we had World War II, you had a lot of them activated at the same time, plus the outer planets. You don't have that this time. You've got one, and you've got no outer planets really activated. But the last time this occurred was when the Balkan Air Campaign occurred, when Clinton was president, and there were these talks about that eclipse was in late Aquarius. It opposed the sun of Bill Clinton and Slobodan Milosevic, and it was at 28 or 9 Aquarius, and there were talks, oh, it's the Balkans, it's going to spread into a world war. No, there was only one eclipse. It's the same condition this time. And the second thing we know is it's one of the 4 royal stars of Persia, which suggests that Iran is somehow going to be involved. So those are the 2 things we know. So I'm expecting the differences between the current administration and the agreement signed by the previous administration with Iran to be a very big issue going into August. And if you go down one more, that is the eclipse path, which obviously cuts the USA in half. It is similar to the eclipse paths of Robert E. Lee, who was, of course, the general of the Confederate Army in the war between the states, Harriet Beecher Stowe, who wrote Uncle Tom's Cabin, And it is also, I forgot this last time, similar to the eclipse that occurred at the end of the Civil War, because Jane wrote that eclipse paths at the end of a war signal a potential area of conflict in the next war. So this...
We'll take a break. Stay with us,
Yep.
Bill, okay? We'd like to finish up with you.
right
Bill
here.
Meridian, Cycles Research. Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Bill Meridian of Cycles Research, and I believe we're on page 17.
We were just on 15.
Oh, 15. Oh, gee, that was doing I see there's 2 ecliptic paths. I just did the second one. I'm sorry.
Okay.
Just give me a second. I have to be retrained quickly.
Let's shift to 16.
Okay, we got it.
Well, 16, what you see now is the same eclipse path, but we zoomed in and we imposed an ACG map, which means the planets in the horoscope of the eclipse itself are superimposed on the map. And where they cross, this is in my book, Predictive Power of Eclipse Paths. I have an example of this. You see Mars on the midheaven. It's circled. It's in red, so you can see it easily. You see where it cuts through the line. That's near Cheyenne and Denver. And then you see the eclipse itself is directly overhead at Omaha, Nebraska, Wichita, Kansas. I think this is the line at which it's signaling the summer of resistance, because the reports I'm getting is they're getting more and more violent. And the group Antifa, a bunch of them were arrested on top of a roof with bags of bricks. They were actually going to throw bricks down on people. You can kill somebody that way. So I'm pretty sure there's going to be violence along that line. And the split, of course, is between the radical left and the people who value their constitutional government. That is what it means. And I could, next time we get on, I can tell you more about the eclipse, because obviously, I mean, for example, it's on the Mars in the horoscope of Israel. That I haven't even mentioned yet.
Wow.
And so I think between now and the end of August, it's going to be, the media will be pretty hot with conflict with the Trump administration, conflict with the Middle East, North Korea, and internal domestic aggression and violence, unfortunately.
Well, it's certainly fitting together. That's absolutely for sure. Okay, we'll do the next one now. Folks, if you're interested in all these charts, all you have to do is email me, and I will send them out to you. That's okay, right, Bill?
Yeah, sure.
Okay, good. So the next one, Ron, is in search of, this is International Astrological Quarterly?
This is just an advertisement.
Well, I'll take care of the advertisement off air. Thanks a lot, Bill, for joining us. Really appreciate it.
Larry. Hello from New York, by the way.
You bet. God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.